Okay guys, so welcome to CyberTrust YouTube channel, and today I will tell you about CABS token value proposition. So what is CABS token? CABS token is an ERC20 standard-based Ethereum token, and it's the only way to convert digital assets into crypto securities via our securitization platform. Basically, it's a plain vanilla access key utility token on which we'll further base as a second step decentralized investment banking protocol, which you can use securities on as well as open it to all the rest of really cool projects out there. Plus, so CABS token plus any digital asset. Initially, we will only work with BTC, which is Bitcoin, ETH, which is Ethereum, and BCH or BCC if you're in China for Bitcoin Cash. And we plan to add other top 20 digital currencies by end of 2018. And we're looking for Dash, clearly Monero, also NEM. So CABS token plus digital asset equates to crypto securities or crypto derivatives, if you want like a formal definition. And this is an instrument which really doesn't exist yet, but needs to be, because there's really need for that. It's a crypto security, which is really a form of a derivative, but in essence, it really provides a lot of utility, which number one is titled auditable ownership, clear tax implication, risk-free clearing and settlement, robust security and storage. And this instrument that we're creating right now, guys, together with you, is really a form of a bridge between crypto economics and traditional finance. And those are, as you know, are two different worlds right now, a world apart. And there are many bridges that needs to be built between those two worlds. And one of them is a bridge through, Ethereum, and we use Ethereum for the front end to get all the blockchain assets in, and Foundation Zook, and on the other side, Foundation in Dutch Foundation with a proper Luxembourg-based securitization structure, which will give you access to the ability to actually put depository receipt notes on the crypto assets. So what is the underlying value of securitization or crypto securitization? And it really depends on four major kind of pillars. One is titled ownership and auditability. And that means that accountant of any bank or any big company is able to actually properly book it to the assets of the company. And everything else is very transparent and clear, and the ownership goes to the company or to the whoever his booking is under. And this is a very important part because crypto right now does not have such simple thing as a titled auditable ownership. But by creating a security with a SIN number, it automatically creates that. So that's number one. Number two is risk-free clearing. And the point here is not only that it's really extremely risky to actually counter trade in the crypto markets because of a number of reasons, but more importantly, it's not even about that. It's about the fact that institutional investors in their mandates have requirements for risk-free clearing, which means that they cannot absolutely take any transactional risks because they're fiduciary responsible managers of other people's money. So in this case, they just cannot trade with those instruments, right? Because they would prefer to deal with Clearstream or Euroclear, which have absolutely no risk for counterparty and settlement, for them. So that's very important for them. Third is just simple cybersecurity. How do you store that for physical safety and for technological safety? What kind of solutions you use? Is it a really good solution or a bad solution? So cybersecurity. And the fourth, which is really the key for them, is compliance. And the problem here is that crypto assets by nature, as you guys know, are unregulatable, for lack of a better word. And that means that sovereignty of the nation cannot really control them because they're de facto almost like above sovereign above sovereign assets, which is a very interesting way of looking at it, but it means it cannot be regulated, which creates a lot of problems, not only like bad, and many people would think automatically bad, but there's really problems because let's say that you have a judicial system in the country and the judge decides on what is truth in a particular instance. And it says, the judge decides something, but the judge is unable to enforce or recover anything related to crypto, which is a big red flag for sovereignty, right? Like it cannot use basic ways of controlling that at all. And on regulation, there's also it's not possible either. So, but by creating a security or a derivative of a crypto key, which is stored in a bunker, let's say in Switzerland, and custodied by a professional technological firm, let's say that derivative can be frozen in Luxembourg because the judge in Luxembourg can say that, listen, I want to freeze this asset until I resolve this matter. And then, of course, the custodian, we will freeze the asset, which means that all of a sudden, crypto can be, part of judicial system and can be part of regulatory environment and can be regulated, right? If it's done according to proper things, of course. So, and there are a lot of people that really want to properly and legitimately own Bitcoin because they want to pay taxes and they just want exposure to the purchasing power safety of Bitcoin, right? Because relatively to other assets, it could be argued that Bitcoin can be a better store of value than other types of assets or traditional assets, right? So, and we at CyberTrust, we really believe that. We think that digital assets is a really new asset class. But to be an asset class, it has to really behave as an asset class. And this is in this particular instance. So validation, right? So you can say, okay, well, listen, if there's such a demand, then it should be a lot of price difference, right? And actually, it's true. There's like a huge value there. So this is a problem on one side, but also an opportunity on the other side. And the size of this opportunity right now is basically premium. This is a case of gray scale investment, Bitcoin investment trust, which is basically first such instrument created by Barry Silbert and Digital Currency Group, and this has been traded now for a year and a half, I think, and it carries an absolutely huge premium over the price of the underlying asset, and the ratio is about 1 to 10. So it's very simple. You just, and it's roughly, please open prospectus to read better, but roughly you should just add 0 to it and you get the price, the market price people are willing to pay per one Bitcoin relative to the actual price of the Bitcoin. And the actual price of Bitcoin is measured, here it says Bitcoin holdings per share is calculated daily at specific time on a 24-hour weighted probably average basis of a trade block XBT index. So there's some kind of index that they measure this against, but point is that it's a price of Bitcoin, probably minus their cost. And this shows you that at that time, they estimate that the price of per Bitcoin was $9,326, as opposed to people were willing, or institutional investors were willing to pay per one Bitcoin, they were willing to pay $16,660 per one Bitcoin. So why would they do that, right? Like just idiots, those guys. But in fact, it's like there's no other choice. If you want to have a Bitcoin, you really have just one option. Because you want to have it titled, you want to have risk-free clearing, you want to have the judicially recoverable and enforced, and tax clarity, and all of that, right? So it's important for those guys, and this is a price they're willing to overpay that. So what are we offering, right? CABS token risk return profile. So what we're saying, guys, okay, let's just do a platform, an open platform for securitization, and allow anyone securitize really cool digital assets. And the price of that service is 2.5% of a premium over the price of underlying asset. And right now, if you look at Bitcoin Investment Trust, today it's traded, or yesterday it was traded at 50% premium. 2 weeks ago it was at 30, but 2 months it was about 100% premium. So it's extremely volatile instrument, but you are paying 2.5% for it. And yes, it's not there yet. So we are creating the system and we're launching it next year, Q2. So there's a discount to that. But proportionately, right? If it goes to zero, we will just not do securitization because there's cost involved. And the upside to where it can be is like 12x to 26x. So relative risk return or upside downside is just very, very good trade. Although it carries risks. So what are our major risk? And our major risk in this case is really regulatory environment in Luxembourg may change, or paying agents may not work with us. But given premiums, we do see that getting resolved eventually, even if the project gets delayed. So that's your major risk, guys, right? When you look exposure to this token. So we are selling right now each token at 0.6 ETH pure CABS. So, but we also think that actually we are better. And we are better because of 4 major reasons. And the last one is most important to us, is open, right? We're tokenizing this service. And then we will base decentralized investment banking protocol as a step 2. But also it's better because it's Luxembourg tax, and Luxembourg judicial. It's not American. And many people think that's important. But also Luxembourg in 2004 created so-called securitization law of 2004, which made Luxembourg into the worldwide center for fund management services. And it's a really, really, effective jurisdiction. And what they say is that if you create securities or securitize assets and you reduce the risk for holding, then you're qualified for the pass-through taxation. And in our case, we are really de-risking because we are de-risking risk clearing and settlement pretty much completely. Cybersecurity goes to like really, really premier Swiss bunker in Switzerland, which provides a lot of physical safety, including magnetic protection against magnetic waves, and also top tier company for technological safety. So that's maybe not risk-free, but as risk-free as you can get in the current environment. But also, we provide just more crypto, right? Because we are starting with 3, and then by 2018 we will add Dash, NAM, Litecoin. I mean, there are a lot of cool tokens out there that have a lot of potential. And then, of course, as soon as the protocol is opened, anybody will be able to use the protocol for investment banking and add their token to the infrastructure. But short term, right? What do you really need crypto nodes or crypto securities, whatever you want to define that as? What do you need them for? And you really have 3 major use case scenarios, and let's go over one by one. So number 1 scenario is this just hassle-free hypersecurity solution and risk-free clearing, just holding basically. You want exposure to Bitcoin as an underlying asset. You don't want a tracker. You don't want a derivative, which is a futures contract. You want access to physical digital gold, which is a private key. You want it inheritable, etc. So you may prefer just to hold it via Bitcoin node because it provides a lot of things that crypto does not, right? And those are listed here. Number 2. If there is a price difference, and right now there's a huge price difference, you can arbitrage. You can basically create markets. And we believe that the markets will be created for those securities over time that will bridge 2 systems. But in the process, there's a lot of pain and a lot of value out there that can be earned by arbitrageurs, right? But what really fascinates us at CyberTrust is that all of a sudden, as soon as those instruments are created, you can actually create really cool crypto financial products with them. And this is things like, I don't know, ETFs, 2x long BTC or 3x long BTC ETFs, but also things like treasury bills and Bitcoin terms, or Amazon and Ethereum, and all sorts of things, really, really cool products that will come to the markets and will help, drive more adoption and more investment capital into the ecosystem. Okay, so let's talk about competition, right? That's very important. And that's how we kind of segment it out, right? There's like 0 reserve guys and 100% reserve guys. And this difference is very important because in one case there's no asset, right? Like there's just like some kind of a bet or some kind of some kind of agreement. And actually, in fact, futures contract for SME, which are announced, they're actually in this category because there is no underlying asset, right? It's a settlement against a pool of fiat money that can be, by the way, stupidly taken away by big whale. Because it's really dumb what they're doing, but in either case, there's no reserves there. In this category also comes a company called eToro, which does CFD, which is a contract for difference, and this asset that has 0 crypto in it because it's just a bet between two people on, let's say, a direction of Bitcoin or Ethereum. Then if you move further, XBT provider. And they started like a tracker, so it was they kind of said that they give you exposure to the asset, but they're not saying how, right? So but I think they're moving now towards reserves, but it's still called tracker, right? So it's like there's really they're kind of vague about is there real Bitcoin and can they claim it, right? And then you have CyberTrust Us and Grayscale, which really provide almost like a Bitcoin, right? Because in the case of Grayscale, Bitcoins are in the fund. The question is, can you really access that? That's a different question, but they're there, and they are on a very sophisticated structure, and it's very properly done and very well done, right? But it's still a fund, which means that there are risks of the fund level, like maybe employees of the fund get sued them and etc. So there's selected risks, and that's why we went not the fund route. Although we did go initially and we created the fund and then learned all the legal risks. And then we redid it for securitization because securitization comes as close as owning the asset as you can get. When we were creating a standard for security for crypto in Luxembourg, we try to make it as clean of a claim as possible, right? And you can actually redeem it yourself. So if you actually want a crypto back, you go to administrator, which in our case is a third-party licensed Luxembourg, administrator, and you claim it back. But then you get it back settled via our system that we're building through Ethereum. So it's as close to owning as you can get, but still within a proper jurisdiction. And then we also kind of rank it open and closed, right? And closed means it's centrally managed, and only you can basically decide what to securitize or what. Or an open is basically it's decided by the token holders, right? We're tokenizing it. So how big is potential demand, right? And what is the supply? So on the demand side, the total derivatives market is $500 trillion. That's according to many people out there, and I think that's like a lowest actually mark. So if we assume just 1% of crypto derivatives market penetration, it's already $5 trillion, right? And right now we have initially put a big cap. Now we reduced it, and I think we're going to reduce it further. But the supply is not very big. So how the token distribution is done, right? So it's pretty simple, right? 67% is sold, 13% goes to management for distribution, bounties, advisors, investors, and marketing, and all sorts of things. And then foundation gets 20% as a reserve fund, which it uses for development and for supporting the token price, and also for working capital, which is in our case needed for securitization, because the minimum pools that we can do is with investment banks at about $10 million peer securitization pool. So what is our product and what are our use cases? So we have created the product. We are talking right now with a number of very large investors, including sovereign wealth funds, and we are discussing things like treasury bills in Bitcoin terms, or ETFs for 2x and 3x, right? Or like in the case of this French-based hedge fund, they want Amazon denominated in Bitcoin or Ethereum because they really like Amazon and they see Amazon in 20 years, but they do not see dollar in 20 years. So they want, and Amazon in Bitcoin could be an interesting opportunity for them, and they certainly think that way. So if you guys want to contact us, you can contact me directly, or you can just contact us at Telegram. This is my Telegram account, but you can also write to CyberTrust Bank and join our Telegram group. Thank you for watching this presentation, and please subscribe to our YouTube channel for CyberTrust. Thanks, guys.